The problem isn't the pandemic. The problem is our economic system. And as most of you guys know, on September 17th, 2019, there was a crash in the repo market of the shadow banking system. And then voila, COVID appears in December of 2019. So I was always a little suspicious of it. I'm not saying it's not real, but it was a little too convenient. Something's fishy, and that was kind of my suspicious mindset. But gold, silver, and Bitcoin are investments of disaster. You know, if everything was perfect, you don't need gold, silver, and Bitcoin. So I've been collecting silver since I was in 1964, when I found out that silver tinge upon my little dimes and nickels and then dimes and quarters. And I started buying gold in 1972. My first coin was in 1972 was in Hong Kong. I bought a Kruger in. And the reason is I understood what happened when Nixon took the dollar off the gold standard. And so, as you know, most of the pessimist gold guys like me just know you just can't keep printing money. And so this COVID thing is a little suspicious. You know, last night on Tucker Carlson, a female virologist came on and she had to escape from Wuhan. She says it's manufactured. My doctor says the same thing. So there's things about it that don't make sense. I'm not a doctor of virologist, but the people I know said there's something fishy about it. The gap between rich and poor, as you know, is growing. And then when at PPP and all of the social programs giving people money, people are now would rather stay at home and get paid. I mean, who wouldn't? But, you know, and anyway, and people hate Trump a lot. I mean, I've never been political, but Trump is my friend. We wrote 2 books together. And we're both concerned about financial education. So the gap, the real problem is the gap that this coronavirus exposed is massive, massive. You know, I wrote another book, it came out in January 2020, was Who Stole My Pension?
Yeah.
And many people know that Wall Street, the shadow banking system, the Treasury, and the Fed have been sucking cash out of pensions. So the old guys like me, we're in trouble. The boomers are in trouble. You know, I'm an investor. I have a lot of companies. And the people that work for me also think I don't do anything. But I provided the capital, we provide the structure, we take the risk, we do all that. But there's this guy, Richard Wolff. He's a Harvard, MIT, and Stanford guy. He's the most popular Marxist we have on YouTube today. And he's the guy that's saying that capitalists add nothing to a business and it should all go to labor. So if there's $1 million profit, then the labor should take the money, not the shareholders and not the capitalists. So that's Marxism versus capitalism. I'm pretty hardcore capitalist. And there's a time and place for socialism. I mean, there's people who really do need help, that people should be helped, but not to sit at home and get a paycheck. Well, you know, that old saying is don't fight the Fed. And there is some truth to that. If you had followed that advice in 71, you did okay, because the Fed always bailed you out. But that's what I was talking about September 17th, 2019, that fire in the repo market. You know, they couldn't, and the Fed jumped in and the Treasury jumped in to save the repo market. That's socialism, that's communism, that's central controlled government. So now the economy is controlled by the Fed and the US Treasury. Free market is gone.
It's a Fed-fueled party, basically.
Correct. And what happened is separated the price of a stock from the fundamentals of a stock. And so, as you know, many of the CEOs were just borrowing money off their corporations, like let's say Ford, and making them they went from AAA to BBB junk bond status. It was AT&T and all these companies. So the CEOs were complicit in borrowing from their corporate treasury, repurchasing their stocks, which sent the price of the stock up, and then the CEOs parachuted out under capital gains taxes, not ordinary income taxes. So this whole thing has been one, as the Marines would say, a gaggle F. It's just really a mess. I would say so. More than gold is that he's out of bank stocks. And again, it goes back to September 17, 2019, when the Fed and the Treasury entered the repo market. We became a centrally controlled economy. That's communism. So it looks like Buffett is saying the banks aren't going to make it. Because, what happens every single time is when the Fed and the Treasury take over, they don't need commercial banks. They want to go straight from the Treasury to the people, which is PPP, Universal Basic Income, UBI, and MMT. So the Fed is now becoming the banker for the people also. That's centrally controlled economy.
This time, would it be worse than 2008 for the banks?
Yes. Well, look at the numbers. In July, the deficit was 86 billion. In 2008, the deficit for the Fed was, I think, 800 billion or something like that. And now in 1 month, the U.S. runs a deficit of 86 billion, whatever. The numbers are so staggering that, and we're insolvent. The U.S. is insolvent. So that's why I tweeted, I said, when the vaccine appears and happy days are here again, the real problem has always been the economy. It's been the central bank, the repo market, Wall Street, and U.S. Treasury. When you look at zero interest rate policy, which we're going to, that's saying we don't want your cash, we don't want your savings. They're forcing mom and pop into the equities market or the bond market or the real estate market. And the reason what Stansberry does, it provides information. Look, we live in the information age, and you want to have the best information possible. So that's why I like YouTube, I like the Stansberry Report, I like Dolman Wellington. They don't say the same thing. But with zero interest rates, you have got to be better informed. So that's why it's the information age, and we're going to make money trading on information. So the Stansberry research, I've been following, been part of you guys for years. I don't always agree, but I've got to listen to what Stansberry says. Same as other experts. So today it's not money, it's information. And if you're going to survive into the future, if you're just going to buy, hold, and pray in your 401k, you're toast. You're toast, because there's no correlation right now between the price of a stock and the underlying fundamentals. And the reason I said gold, silver, and Bitcoin will crash when the vaccine will come out, I tweeted it's a good thing, because it's a buying opportunity, because the problem wasn't the pandemic anyway. The pandemic has always been the underlying repo market, shadow banking system, the Fed, the Treasury, and all those characters. So information is the key for the future, and that's why you've got to be up to date on it every minute, because zero interest rates are saying we don't want your money. That's what it means.
As always, Robert Kiyosaki causing us to think.